everyone, I am Dr. Nagadeepa, Associate Professor, Department of Commerce, Kristu Jayanti University. Today, I am going to discuss about one of the important topic in income tax, that is capital gain. Because all are investing money in gold, land, real estate, shares, everything. So, we should know the tax related information behind this capital assets because we all are going to pay tax on that. So, we should know the information regarding capital gain and capital gain taxes so that organization, individual and everyone can plan how, when, what, how much you have to invest in capital assets. So, for to know how to calculate capital gain, first you should know what is capital gain. It's very simple. Any profit arises from transfer of capital asset is called as capital gain. That means you are going to transfer your asset. It may be gold, it may be land, it may be shares or anything which you are going to transfer. That means you are going to sell to somebody else is called as transfer. Now, there is a condition behind the transfer. We will see one by one. There are 4 conditions which is considered as a transfer. Number 1, there should be any asset. That means you should transfer your asset from one person, that is from yourself to other person. Next condition is there should be a assessee. That means it may be individual or any person should be there to transfer. And third condition is and it should occur during your previous year. Then only it will be coming under your year. And the last one is through this transaction there should be any profit or loss, that means gain or profit. So, this capital gain again divided into 2 categories, that is one is long term, another one is short term. That means long term capital gain will be arising from transfer of long term capital asset. Short term capital gain will be arises from transfer of short term capital assets. Now, you should understand which is considered long term, which is considered short term. How to determine whether that asset is long term or short term. So, for that, first of all, you should know whether the transaction happened before 23/7/2024. Then, the assets were divided into 3 categories. One is listed securities. That means any securities which is shares, debentures, anything will be considered under securities. So, listed securities, UTI, mutual funds, anything zero coupon bonds will come under first category, and which is less than or equal to 12 months if you are holding, then it will be considered as short term capital asset. Second category is unlisted shares and land, building or land and building. So, these will be considered under second category, and this category if a person is holding less than or equal to 24 months will be considered as short term capital asset. And the last category is unlisted shares. That means other than unlisted shares, maybe debentures or anything that and others, all others, example gold, all these things will come under the third category, which is considered less than 36 months will be considered as a short term. Comes to long term, all these 3 categories again remain the same, but the tenure will be different. That means first category, if you are holding more than 12 months, then it will be considered as a long term. Second category, if you are holding more than 24 months, will be considered as a long term. And third category will be more than 36 months, will be considered as a long term. So, these all are the transaction if you are making before 23/7/2024. Now, we are moving to the next thing. What does that means? The transfer happens after 23/7/24 means what will happen? The transaction earlier was divided into 3 categories. Once it becomes, that is after 23/7/24, this will become 2 category only. The last category will be removed. That means there is no 36 months. Only you have less than 12 months or less than 24 months. That means first category will remain same and remaining all will become less than 24 months, less than or equal to 24 months, which is considered as a short-term capital gain. Same thing happens in other next category, that is long-term also. So, in previously long term had 3 categories, that is about 12 months, about 24 months, then about 36 months. Now, if the transaction happens after 23/7/2024, then there is only 2 category. The last category will go. So, you have only 2 category, that is about 12 months and about 24 months. Only 2 category. The last category will not be there. So, this is the major difference in long term and short term. Now, I am going to teach you how the short term capital gain will be calculated. So, I will be telling you line by line how it is going to be considered. First of all, you are going to calculate the short term capital gain. So, for that you have to decide based on the holding period. What is holding period? That means when you have purchased, when you are sold. So, different between these days are considered as holding period. So, based on the holding period, you will be deciding whether it is a long term or short term. So, the rules already we saw in the previous slides. So, it may be 12 months, it may be 24 months, it may be 36 months based on when you are transferring your assets. Okay. So, now you have decided that asset is short term. Okay. Now, how to calculate the capital gain based on the short term assets? Okay. Now, I am transferring the short term asset, then how to calculate? First step in the short term capital gain is as follows. Okay. Now, first step you have to consider the sale consideration. That means nothing but how much you are selling your asset, how much you are going to receive. That is called as sale consideration. So, sale consideration received or receivable will be the first step. Next, you are going to deduct the expenses related to that particular transfer. That expenses may be anything. For example, you are paying some brokerage, you are paying some commission. All this will be coming under the category of expenses. So, this expenses should be deducted from the sale consideration. Okay. After sale consideration, whatever you have deducted, the net result will be considered as net sale consideration. Okay. This is the third one. Next, we are moving to the acquisition. What is that? Cost of acquisition. What is cost of acquisition? You would have been purchased that particular asset, paid some amount. That amount is considered as a cost of acquisition, which you have to deduct from the net sale consideration. Next, sometimes you may have cost of improvements. You may have, may not have. What is cost of improvement? For example, you have purchased a building which was having only one floor. Then next you would have been constructed the first floor. So, that is called as cost of improvement. Or that building may be little old, you may be renovated that particular building. So, that is called as cost of improvement. So, that cost you have to minus. Once you minus, the remaining answer is called as taxable short-term capital gain. Sometimes you may have some exemptions, you may not have exemptions. So, this is one of the example how you are going to calculate this particular problem, how you are going to calculate the short-term capital gain. Okay. First of all, read the problem. The problem says that Mr. Ravi bought a house property in Jan 2023 for rupees 20 lakhs. He sold the house in May 2024 for 66 lakhs. So, that 66 lakhs is nothing but sale consideration and 20 lakhs is nothing but acquisition cost. Now, commission paid by him is 1 lakh. So, this 1 lakh is nothing but expenses related to transfer. Now, what do you have to do? You are going to calculate his taxable capital gain for the assessment year 25-26. First step, you have to identify whether this asset is long term or short term. Okay, so how to calculate the long term or short term? First of all, you should compare the date of purchase and the date of sales. So, between these two dates, how many months you are holding? If you see, in the month of January 2023, you have purchased. So, in 2023, how many months are there? 12 months. And in the year 2024, you are holding up to May. So, May means in 24, you have 5 months. So, totally 12 plus 5 equals 17 months you are holding. And this transaction is happened before 23/7/2024. So, then your holding period should be less than 24 means it is short term, above 24 means long term. But here you are holding only 24, less than 24 months, that is 17 months. So, hence this asset is short term capital asset. So, this is the conclusion you have come. This asset is short term capital asset. Now, how to calculate the gain, taxable gain? Okay. So, as per our format, first step you have to take the sale consideration. So, in this problem the total sale consideration is 66 lakhs and you have paid the brokerage, that will be considered as expenses. So, less expenses incurred in connection with the transfer is brokerage, which is 1 lakh you paid, minus it. So, remaining you are getting 65 lakhs, that is called as net sale consideration. Okay. So, next step you are going to minus cost of acquisition. What is cost of acquisition? He has purchased for rupees 20 lakhs, that is called as cost of acquisition. So, less cost of acquisition 20 lakhs. And the next thing is you are going to minus the cost of improvement if it is there. In this problem there is no cost of improvement, so you are going to put nil over there. Then take 65 lakhs, which is net sale consideration, minus cost of acquisition is 20 lakhs and the remaining 45 lakhs is taxable short term capital gain. That is what a person should pay tax on this particular asset. Okay. I hope you understood very clearly about what is capital gain. What are the different types of capital gain? How to determine the capital asset, whether it is long term or short term. Once after determining long term and short term, how you are going to calculate the short term capital gain. This you understood very well in this class. Hope you all understood very well, and it's very important for you to plan whether to hold the asset for long term or short term, or the arising tax, how you are going to pay the tax. All this is helpful for you to plan for the future. Thank you so much. I hope you all understood very clearly. We'll meet you in upcoming classes.